So in today's video, we're going to talk about a conventional loan. If you're looking to buy a house in 2025, this video is for you. We're going to talk about credit, income, guidelines, tricks and tactics to get you to the finish line. So let's get after it. So what's a conventional loan? A conventional loan is just like any other loan. The only reason why you should care about this loan, it offered the best terms. But in reality is the hardest to qualify for because it's insured by private sector, it's not insured by the government. So let's be honest, private sector would like to know that they're getting their money back. So income and employment guideline, let me tell you, a lot of videos you're going to be watching, it's going to tell you you need 2-year work history. In reality, that's not how the banks look at it. They don't technically care. All what they care about is getting their money back, and the name of the game is stability. So let's say, for example, you decided to go start a business tomorrow. Now, this does not look stable, so they require 2-year history. But on the other hand, let's say you graduated with a medical degree and you get an offer letter from a hospital. They would love to have your business the minute you get that offer letter. So that's how it usually works. So let's talk about income calculation, how the bank look at your income and how they calculate it. And this is very important because this will tell them how much house could you afford. So let's say, for example, you make $10,000 a month. They take that, they divide it by 2, and that will give them the total amount of debt that you could carry. So that includes your new house payment, your car, your student loan, your helicopter if you have one. Would love to know you if you got one. And that's how they calculate your income. A lot of banks will go up to that limit, but some of them don't. But the majority of them, I would say they go up to 50% of your income. So credit score requirement. Man, I've been avoiding this subject. Let me tell you why. So 620, you technically qualify, but I'm telling you, you're gonna get killed on rate and fees, and it's just not gonna work for you. I would recommend you a government loan, like a FHA loan or USDA loan, but I won't recommend you a conventional. But on the positive side, if you have a really high credit score, you're gonna get the best term, the best of everything. So that's where this loan comes to play. So let's talk about how much cash you need to put down out of your pocket. Is the minimum is 3% for a first-time home buyer. Now, here's the thing. What qualifies as a first-time home buyer is very important because you might qualify. So if you didn't own a house in the past 3 years, you are technically a first-time home buyer. Congratulations. You could put 3% down. Now, in some cases, we could get you in with 0% out of your pocket with the government assistance program. I don't usually recommend them because they are a pain in the butt to deal with and hard to qualify for. And let me tell you, there's nothing in life is for free. Majority of them, you got to pay them back if you rent the house or sell it. So what's a mortgage insurance? A mortgage insurance is something that you must have unless you put 20% down. And this kind of insurance, it protects the investor in case of a default. Now, on a conventional loan, it's a lot cheaper, especially if you have like a high credit score. They will offer you for dirt cheap, like 80 bucks, sometimes 100, whatever. But the thing is, the mortgage insurance on a conventional loan, you can drop it when you reach a certain value. So 80% of what's the house worth. So if your loan is 80% of what is the house worth, you could request the mortgage insurance drop. Save yourself a couple $100. On the other hand, any other type of loan except for a VA loan, which is a veteran loans, you must have a mortgage insurance, and usually it's a lot higher. So what's a new conventional loan limit in 2025? Man, every time they get a chance, they've been bumping those numbers. So that's what's the most recent. We on a single family home, we're almost up to $1 million. We're at 806. But this is not a high cost area loan limit. This is not a California, not a New York kind of thing. This is more like Florida, North Carolina kind of limits. So what type of property you could buy with a conventional loan? Anything up to 4 unit. You could do condos, and seller love conventional loan because they're the least strict when it comes to like if the roof is leaking, it's not a big deal, stuff like that. Now condos, the majority of them that will require conventional, not all of them, majority of them. So that's where this loan comes into play. So let's talk about closing costs. You're going to have a closing cost if you're buying a property, surprise, surprise, let me tell you, it's about 3% of the purchase price, is the fees to transfer ownership from one person to another safely through attorney or title. And there's some of those fees are lender fees, as well as inspection, credit report, and all that fun stuff. So here's the cool thing about this. The seller can actually pay your closing costs up to 3%. And if you put a larger down payment, larger than 3%, that percentage increase. So on average, I would say the closing cost is about 3%. That's how the lender view it, and that's how much they can contribute on a 3% down payment with a conventional loan. So when should you start the process of a pre-approval? I will talk to a lender 6 months prior, and the reason for that, to see if there is anything need to be worked on. I won't start the pre-approval process until I'm like 3 months out, and the reason for that is the credit report only lasts 3 months, the pre-approval only lasts 3 months, therefore 3 months is a good time frame. Now, if you want to get pre-approval, click the link. I would love to help. Schedule a phone call and we'll take care of you. I hope you earn your thumbs up on this one. Consider subscribing, and I'll see you on the next one.